Last week, the Federal Reserve cut interest rates for the first time in 4 years. Joining us now to discuss what that rate cut and other economic factors mean for your money, Racquel Oden, HSBC U.S. Head of Wealth and Personal Banking. Welcome, Racquel. Thank you very much for being here. So it was a really big moment in economic history, and I think some markets reacted the way that people were expecting, some didn't, and I think a lot of people are having questions about how they should be allocating or reallocating their portfolio at this juncture to really capitalize on this change in monetary policy.
Well, first I want to say, Leslie, thank you so much for having me and on this important topic, which is women in wealth. But you're absolutely right. It's best that we kick it off with the economic outlook and figure out what the impact is for us as individuals, and then, hopefully get into some of the factors specific to women. You're absolutely right. Last week was very important and exciting. We did see a 50% rate cut from the Fed. We all knew there was going to be a rate cut. The question was it going to be 25 bips or was it going to be 50 bips? The idea that they did 50 bips was actually received well by the markets, as you can see. The S&P and Dow are having record months and continue to do so. Why this is so important, though, is it's the indication that we are continuing to focus on how we're going to ease inflation. And what we all wanted the Fed to do was really focus on that soft landing. And so while we did receive the 50 basis points cuts, we know there needs to be a continuation of rate cuts. So the new debate is, the question is the next one going to be another 50 bips or will it be 25 bips? Our view at HSBC is there will likely be another cut in November at 25 bips, in December another 25 bips, which ultimately gets us to a total of 100 bips by the end of the year. Why that's important, and the reason why I say that is what I like about the 25 bip cut in November and December, it provides the Fed some optionality. So if the 25 is not strong enough, they know they still have another 25. If they go with the full 50, again, in December, not that it's wrong, it just means they have a little less optionality to course correct. But as we've shared with our investors, the idea here is the continuation of the cuts. It will not, going into 2025 is just as important as the cuts we're expecting for the rest of this year. But the good news is we know where we are from an inflation standpoint. We're in that, what I call the two handle, 2.3%, which is where we need to be. And then also what we do know is consumer confidence and spending is still going on pretty well.
Is there a risk that cutting at this point in the cycle, especially when the economy is holding up relatively well, could reignite inflation? We've seen evidence of this in history. And if so, what does all of this mean for affordability in the economy?
Yeah. So I think the reality is, we know September is always, historically a volatile month. And we know October, we're going to continue to see a bit of this volatility, to your point. As well as we have a very important thing called an election coming up. So pre and post election, we will still see some volatility. So while this is not all inflationary signs, it does show that there will still be some volatility and the markets will react. The intent here, though, what I believe and what we're seeing from our research at HSBC is we always see rallies after an election, which that's important to understand. Equity markets always generally do well. There's only 2 elections where that didn't happen in the history of the U.S. And then additionally, we all know earnings tend to happen in the fourth quarter historically. So the last quarter tends to be where we see the rally. So prepare for some continued volatility, which we've talked about. But we do believe there'll be a strong fourth quarter rally. Now, to your answer around specifically, affordability, the rate cuts are important, and that's why we have to continue to see that. But also what's important that we have not seen yet, and that's the reason why we as individuals still don't feel, quote unquote, the rate cut, prices has not come down. So we look at cars, you look at the price of steak, it's $35, now it's almost $70, Same is true for cars. We need the prices to come down. The good news is wages have gone up. Inflation is coming down, and now we just need prices to settle. And so it will take a little bit more time for us to feel the statement of affordability, but directionally, the economy is going in that direction.
Absolutely. Let's talk specifically about women and this economy, because I know that HSBC did a recent global research study with 17,000 people looking at decision-making behaviors. Yeah. What did that tell you about specifically the way that women make decisions and women make decisions about money?
Yes. So we're really excited about this research because it's about seizing opportunity, seizing uncertainty. And the reason why that's important is the number one concern on individuals and consumers' minds is uncertainty. And to your point, there is definitely a difference in the factor of men versus women. What we really want to focus on as we think about statistically, if we take a look at women, uncertainty for them was somewhere in the 55% range. Uncertainty for decision making for men was closer in that more 40% range. So it's about a 10% difference between men and women. Also, when we think about financial soundness, women were definitely at the 55% range, men being more that 43% range. You probably will hear a lot about this today. Part of it is also just an innate view of confidence. I think for women, we tend to have a little bit more conservative view, and our confidence on financial literacy and actually, economic savviness is one where it's more in our head than it is what we do. It's been proven statistically that women really are very sound investors, make great decisions. It's about confidence. And so why this research was so important to us was helping women and men, but let's talk about it specifically for women, to work through the process of what I call decision making. We have all the facts, right? But how do we get to the point of a decision? And so there are two things that were really sound in the research. First, it was mindset. One is we all get what I call decision paralysis because we're worried about failure. So what we have to do is really change that pendulum to be really focused on not failure, but this is really opportunity or the opportunity for success. So that's just mindset. But then we also looked very importantly at the framework of what you need to be doing. And we'll put it into three buckets. The first one is head. It's important for you to sift through relevant data. And I say relevant because the research also shows that there's sensory overload because there's so much data out there right now. So it causes uncertainty and anxiety for individuals because they don't know what to listen to. So head first. So the data is right, but you have to sift through what I call the relevant data. The second one is really a network, right? And it's really a network where you have what I call trusted advisors, individuals that are sound, individuals that you can have conversations with as you're sifting through this data. And the last one is heart. And I think as women, we're extremely great at this one. Follow your gut. We tend to be right and don't always question that and have confidence in that. And so, whatever it is that we're doing, it's got to be head, it's got to be the network, and it's got to be heart. And quite honestly, if I just shared this framework with you, we could all agree women are great at all of those, but we just got to get the mindset away from failure and really see this as success and opportunity.
It's a really important point, and I do see some networking taking place in the chat, which I love to see. I'm glad that you all are taking advantage of that. So happening kind of in real time here. But when it comes to decision making surrounding investing, is there also an argument to be made, because you mentioned that women are amazing investors, is there an argument to be made that some of that uncertainty is actually helpful in the sense that you're not taking too much risk, outsized risk, you're not making poor judgment, you're really being thoughtful about kind of how you allocate money and what the various scenarios are?
I think you said the words exactly. I think women tend to be a little bit more what I call risk adverse, which then means we really are going to really focus on the data and check every fact. And so the balance of those two, reason why you say it does feed to sound decisions, because it isn't overconfidence for women, and it isn't just us saying, this is how I feel. We tend to overanalyze, which works in our favor in investing, believe it or not. And it's also then us just building the confidence to move forward with our decision. Part of the research, what it did show is women versus men, 55% of women regret they missed out on an opportunity because they didn't make the decision, right? So that's why that decisioning factor is very important. Men are less concerned about missing the opportunity. So that really points to we're making sound judgment, we're doing the research, but what we're not doing is pulling the trigger on the decision. And so that is the reason why we've been so anchored on this research and really building the confidence of women and giving them the framework as well as, generations, because I will tell you there was a big difference between Gen Zs and millennials and baby boomers as well around decision making. But that's got to be the critical piece because we've got the facts. We know we've got the network, and we've talked about, very importantly, making sure you're sound in your heart and your gut. But now we just got to make the decision.
Yeah, it sounds like Gen Z and millennials feel more uncertain in their personal and professional lives and their finances. Not too surprising, given that they have lived through, and we all have, a recession and a pandemic during critical kind of coming of age periods. But to kind of further that, Jane from our audience asks, what key ways can young women build a solid financial base of wealth, both in their personal life and business? So if, in other words, kind of solving for that uncertainty, perhaps, for younger women out there.
Yeah, so what I would say for the Gen Zers or the millennials, what we did see, what their biggest concern was, and I referenced it, and I think they're more prone to it than baby boomers, is sensory overload. Their concern is there's so much data. Instagram, TikTok, Facebook, I could point to so many things. And so what they needed the greatest help with, what I say the younger Gen Zs or millennials, was helping them parse through the data. Their confidence is actually stronger, which is a good thing, but they're overwhelmed with the data because they are exposed to so much. And so what of it is really real and what is not? And so how we help that generation, it really is helping them, when I said, figure out what is the relevant data you should be following, because 70% of them felt overwhelmed with how much data is out there.